Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. Before we begin our video, you want to start off with our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. So this is our stock market technical analysis trading plan. In our video, we'll look at the past week's economic calendar and also look forward to next week. We'll see what happened as far as the most recent price action to identify key support and resistance price levels. We're going to look at the charts of the market leaders, Apple, Google, Goldman-Sachs, Priceline. We'll take a look at those. We'll look at the dollar, gold, and crude oil charts to see if there's any leading sentiment. And finally, we'll have an education spotlight at the end. As we begin to look at the week that was, we see that all three of the major indexes, the Dow Jones, the NASDAQ, and S&P 500, all rose for the week. And this meant that our first quarter for 2012 was a great quarter. The market was up 12% for the first quarter. That's the best quarter since 2009. It was also the best first quarter since 1998. We've now had 4 straight monthly gains. And just in the month alone of March, the market was up over 3%. Not much going on overseas. There was some economic bad news about the UK, and that there's some predictions that they're likely to fall back into recession. And this brought up whether or not there's going to be more quantitative easing. At one minute, there was going to be, during the speech, the budget last week, they talk about austerity measures, but again, more economic bad news, and that always changes the playbook. Really wasn't much going on the corporate side. Our tech stocks had a lot to do with that great first quarter, especially Apple. And on the economic front, the fourth quarter GDP showed an expansion of 3%. So going into next week, we really don't have anything on the earnings front. And as far as economic data, we'll be watching the jobs data. Friday, we have the employment situation, ADP employment on Wednesday. And keep in mind that not this week, but the second week here in April will be the beginning of the next round of earnings. All right, so let's start off with our market sentiment leaders. We're looking at the dollar, and we can see the strong market in 2012, but we have that inverse relationship. The dollar kind of fell off a little bit, a little move up here, but our last week we pulled back, and we see are we going to be able to hold this 79 support price level. So far, so good. So we'll have to see. But definitely sideways, maybe even sideways to down on the dollar. A little weakness there. So weak dollar, what does that mean to gold? Well, it should be good, but for the most part with gold, we see a similar price action, pull back, and now we're trying to hold on to the 1670 support price level. We're holding on to it, but we'll see what happens from here. Sideways for gold. And finally with oil, finally for our pocketbooks, here's our 96 to 102. We broke out of that and went up to 110, and now that 102 is kind of holding up here as support. What was once resistance is now support. So we'll see what happens here. Of course, for our pocketbooks, we would love to see this break so we can get back into this range. Okay, so here we are looking at the S&P 500 on a daily chart, and we'll zoom right on in here into this lovely move up. And we can see here in 2012 that 12% gain we talked about before. But we can also see that the market here, although we had a 3% gain in March, the market has started to level out just a little bit. And what we're looking for is what that catalyst is going to be to get us up above this 1430 price level and potentially even higher. Now, we do have some economic data that could be catalyst. And then we have earnings data coming up in a week or so that will also catalyst. But right now, we can see that we're starting to level up here in the month of March, coming out of overbought just a little bit. You can see how long we really have been up here towards the top of our overbought status. Zooming out to our weekly, we get that same view, and you can really see that 11 out of the past 13 weeks have been of 2012 have been green candles. Nice rising 3 pattern here on the weekly, which is certainly bullish. But we are still overbought here on the weekly. Finally coming out to the monthly chart. And zoom in a little bit here for you. And we can see these four straight monthly gains that we mentioned. And again, what's going to happen here at this 1430 price level. Heading up to overbought in the monthly, I guess you could say there's a little room to grow. But overall, we have to be cautious. But again, as I always say, we can stay overbought. We just need a catalyst to keep us there. Our jobs data could do that. If we have positive jobs data coming out this week, and of course, following that, if our earnings data continues to be strong, that can keep us at a higher level. Now let's switch over to the NASDAQ. And down to the daily. And we have a similar story. Beautiful looking chart. Starting to level off here. Our indicators coming out of the overbought price level on the daily chart. Going to the weekly. Beautiful looking charts here. Really no red here in 2012. But we're starting to see some dojis, and that doji is again potentially signaling indecision, and definitely overbought here on the weekly. We'll finish off with the monthly. And zoom on in. And we can see we broke up into new range. We have our new high here, all-time high. And which also shows you that the S&P is lagging behind. But we also can see on our indicators that they're basically in the overbought range here on a monthly. So again, I'm just saying trade cautious. Allow the catalyst, allow the news of the day, allow the sentiment of the day to guide you in your trading. I'll be very cautious of your new longs. Even if you want to go long, again, get that dual time frame agreement. Let there be a pullback. You don't want to just buy at the highs. So let's see what our market leaders are telling us about the market. First off, we have Apple here. We know Apple, one of our great 2012 stories, took off here. That's great. And we paused here at the 621.45, pulling back a little bit. Certainly we want to watch 594. This is where, if I zoom in a little bit here, this is where our wicks are. So 594, 595 may bring us back down to our gap up right here. So right now I would say Apple is sideways. Notice also this 597 point of control, and again you can see this 595 where the volume support has accumulated. Amazon. How about Amazon? This is interesting. Amazon, which obviously while the market is taking off, just died. And then now Amazon, while the market is pausing, did have a nice little move up here. Very nice move up here. So Amazon after the sideways up, and what's also nice about this is we broke the 200 moving average, and now we're testing it, trying to make it support. So if it can keep that, that's good. We can see on our market profile that this 200 is certainly a place where there's a vacuum down to 192, 193. So sideways up for Amazon. Google, nice little move up there, like Amazon. That's certainly nice. Very nice move. Tested 600. What I watch on Google is that you can see right here back in January, a little gap up here. And where did we pause today? Exact same price. So if we can break here, the 641, there certainly looks like there's room to drop down, maybe all the way back down to our previous 619, 625 price range. But sideways on Google. How about Goldman Sachs? Goldman Sachs is alive again in 2012. Nice little run up. But I would say sideways for this type of price action. Let's see if 117, 118 can hold up. Goldman Sachs sideways. IBM, very strong, very nice. See our move up here. Still at the highs at 209. Not that pullback to the rest of the markets. Look at our 10 moving average holding up here as support here in the month of March, this last week here. Really the whole time you can see the 10 moving average holding up. So definitely sideways up here on IBM. Also Intel breaking out and kind of staying up here at the high. So Intel definitely sideways to up. Look at this vacuum in here. Even though it's not big in dollar amount, nice little vacuum there. Point of control at 27.85. MasterCard. Kind of looks like Apple went up, pulling back a little bit, taking a little breather. Not necessarily closing at the highs for the week, but certainly strong. So I'm going to say sideways on MasterCard. Netflix. Staying within our range. Remember our range here, 127 down here to 95. Right now, you also have to watch 105. Definitely 105 is looking like a price level. So what's going to happen here on this little pullback? And again, I've got 97 down here, but there's definitely an argument for 105. Sideways on Netflix. And finally, Priceline, which is just our new beast. Pretty much closing at the highs. A little pullback here at the end of the week, but definitely sideways, if not sideways, to up. As we come to our education spotlight, we see that the importance of understanding both our training plan, but still allowing room for our mental skills. And this is kind of what we've been focusing on. There is a place for intuition in our trading. But before you allow your intuition, your edge, your feel of the market take control, you have to have mastery of the technical side. And as a part of the technical side is your rules, is your criteria for trading. And once you have that mastered, then there are times where you can allow your feel. When I first started trading options, and I was following Darlene Nelson, I think from Better Trades, I think that was what her name was. She used to talk about the heartbeat of a stock. And I highly recommend that. You need to learn your stock, learn your currency pair, learn it, master it, so that you can allow your feel of the market take place. That's where, I was working with a client the other day, and I said, why are you counter trend trading? You're brand new to trading. It makes no sense for you to be counter trend trading. Let's master trading with the trend before we start trading against the trend. Now, my flip side of that is that when you have a feel for a stock or for a currency pair, that's when you can start to allow for the feel of the market to take priority, take the 51% of your trading instead of the technical side being the dominating factor. So it's important to keep in mind that successful trading is both a blend of both technical trading plan, trading rules, criteria, and your mental skills. Now, finally, in that mental skills, it's not just your feel for the stock, but it's your feel for your emotions and not allowing yourself to be overcome by your emotions and allowing them to control your decisions. As always, we want to make sure that you like, comment, and subscribe to our channel. You can find us on Facebook, YouTube, and Twitter. And our resources, we've kind of narrowed down our resources to what we want to focus on. And basically what we want to focus on for you is our coaching sessions. I was just talking about how I was working with a coach. We can help you one-on-one live sessions, develop a personalized training plan, and take you from being inconsistent to consistent. Our managed Forex accounts, sometimes it's best to allow other people's expertise. It is not it's not bad for you to allow other people to trade for you, as long as you understand why and you're making educated decisions. We have full transparency, again, individualized investing plans, fully regulated, and again, it is your account, it's not our account. And finally, if you're looking for some more training on the stock market, we've got our stock trading nitty-gritty system, which reveals the number one reason why most people are losing money trading stocks and gives you a simple trading technique to lock in profits. In the end, it's all about your ability to make educated decisions about your financial future so you can pull the trigger on your trades, on your money managers, on your brokers, on your whoever you may be using for advice, for intuition, for instruction, and make sure what they're telling you matches who you are as a trader so that you can pull the trigger. Thanks, guys, and I'll see you next time.